Hey guys, in this video, let's talk about financial assets. Okay, so first think about this, guys. What is a financial asset? A financial asset is a contractual right to receive cash, right? For example, receivables. From receivables, you have a contractual right to receive cash. So therefore, receivables is a financial asset. Okay, so financial assets, we can divide it into two parts. Financial assets, which are equity instruments, financial assets, which are debt instruments, right? So for financial assets, which are equity instruments, a perfect example is investment in ordinary share capital, right? So if you invest in ordinary share capital of a company, guys, right? For you, it's a financial asset, right? It's a financial asset. So it is actually an equity instrument, guys. It is actually an equity instrument, right? Then for financial assets, which are debt instruments, a perfect example would be investment in a loan note, right? Investment in a loan note. So you are giving money to the company, right? So you have a contractual right to receive cash, right? So therefore, it's a financial asset for you, right? Okay, moving forward. Financial assets, which are equity instruments, right? So guys, first let's focus on financial assets, which are equity instruments, right? This video is all about this financial assets, which are equity instruments. Okay. So we'll be talking about the initial measurement, subsequent measurement, okay, and all the accounting adjustments and all. So in a nutshell, okay. So financial assets, which are equity instruments, right? For example, you go to a company, you invest in its ordinary share capital. For you, it's an investment. So therefore, it's a financial asset, right? So it's an equity instrument, guys, because it is shares, it is an equity instrument. So now let's talk about financial assets, which are equity instruments, and how to measure it, okay? So initial measurement and subsequent measurement. When it comes to financial assets, which are equity instruments, the initial measurement is always at fair value, right? Is always fair value. What is fair value? That is the cash proceeds you invested, right? The cash proceeds you invested, right? There's a point, guys, right? What to do with the transaction cost, right? What to do with the transaction cost? What is transaction cost? It might be a brokerage fee. Likewise, you have transaction cost. So what to do with the transaction cost at initial measurement, right? So what to do with the transaction cost actually depends on your subsequent measurement, right? Depends on your subsequent measurement, right? So you have two options for subsequent measurement: fair value to profit or loss, FVTPL; fair value to other comprehensive income, FVTOCA, right? Depending on that, guys, at initial step, what to do with transaction cost will depend, okay? So if subsequent measurement is FVTPL, fair value to profit or loss, at initial stage, you have to expense the transaction cost to statement of profit or loss, okay? If subsequent measurement is fair value to other comprehensive income, FVTOCI, at initial step, you have to capitalize the transaction cost as a part of the asset, okay? So that is how you do the adjustments. Then subsequent measurement, right? You have two options: fair value to profit or loss, fair value to other comprehensive income, okay? So the default method of subsequent measurement is, guys, FVTPL, fair value to profit or loss, right? Actually, this depends on your intention, right? This depends on your intention. Let's say you purchase shares of a company for trading purpose. For trading purpose, you're buying today, you're selling tomorrow, right? So likewise, if you are purchasing shares of a company for short-term trading, right, you have to record it under FVTPL, fair value to profit or loss. The intention is for short-term, okay? Oh, otherwise, guys, this is the default method as well. Remember that as well, right? FVTPL is the default method. So if FVTPL is chosen, initially you have to expense the transaction cost to statement of profit or loss, okay? And any fair value gain or loss, right, in the financial asset, if FVTPL is chosen, the gain or loss you have to take to statement of profit or loss, right? Then FVTOCI, fair value to other comprehensive income. So if you purchase shares of any for long-term purposes, right? For example, to get the voting rights, to get dividends, so on and so forth. Likewise, if you purchase shares for long-term intention, right, you have to record it under FVTOCI, fair value to other comprehensive income. So at initial stage, you have to capitalize the transaction cost as a part of the asset. Okay. And any gain or loss in the financial instrument, right? Financial asset is taken to the OCI, fair value reserve, guys, right? OCI, fair value reserve. Actually, any gain or loss in the financial asset, right, is taken to OCI. And in OCI, guys, right, you know what is OCI, I suppose, right? I'll explain it in the next video as well. So in OCI, it will be taken. And in your statement of changes in equity, you have to open a new reserve called the fair value reserve. They are also in the fair value reserve, you have to record this, right? Fair value gain or loss. Is it clear? I suppose it is. Okay, moving forward. Now let's look at an example, guys. Okay, read through the example with me. Jivon's company invest $20,000 in ordinary share capital of company A. She wants to get voting rights and dividends from the investment, so elects to account for it under FVT OCI. The transaction cost incurred was $1,000. At the end of the year, fair value of the investment was $25,000. Okay. State the double entries for initial and subsequent measurement. Cool. So at initial measurement, look at the double entries. The cash proceeds that you invested, you have to debit the financial asset 20,000, credit the cash 20,000, right? Since subsequent measurement is FVT OCI, fair value to other comprehensive income, at initial stage, you have to capitalize the transaction cost as part of the asset. So transaction cost, you have to debit the financial asset 1,000, credit cash 1,000, right? So guys, the initial value therefore of the financial asset will be how much? 20,000 plus 1,000, 21,000. Okay. Then subsequent measurement. At the year end, the fair value of the investment was $25,000, right? Okay, but the initial value is $21,000. So how much is the increase, case? It is $4,000. Okay. So then that $4,000, since FVT OCI is selected as your subsequent measurement, right? What you need to do is you have to debit the financial asset 4,000, right? You have to credit the OCI, or you have to credit the fair value reserve. Okay, 4,000. So that is how you account for it, guys. Okay. So basically what I would advise you is go to this video once again. If you can take some screenshots, okay, and go through them, guys, read them properly and try to get the points. Okay. In the next video, we'll be talking about financial assets, which are debt instruments. Okay. For now, thank you, guys. Let's meet soon.